topic today will be about determining asset balances. Asset balances. So in our previous class, we learned what are assets, not are liabilities, isn't it? So we have two types of assets. We have non-current assets and current assets. So we said that non-current assets, they can be used in the long term. Current assets, use them in the short term. And non-current assets, we have said some are the long term, can be used in the long term or even for a long period. Example, furniture, motor vehicle, we have even land, we have what else? Yes, premises, furniture and fittings. Current assets we have like cash, we have store, and another example, debtors. So, but today we'll focus on the non-current assets. So we note this. You can note somewhere small, just a point. Remember this topic, or this, you must be able to determine the asset balances, because in the profit and loss you will come across this. They need to determine the asset balances. So, meaning of asset balance, what does it mean? It means calculating the value at which a non-current asset, the value at which a non-current asset, should appear in the books of account. The value at which a non-current asset should appear in the books of account at the end of an accounting period. At the end of an accounting period. So an accounting period may end when? That 1st December, that 1st June, 1st, can it end on 1st? No. At the end of a month, or even at the end of a year. So, what is the formula? The formula, we have the carrying amount. How do you find the carrying amount? It will always be equals to the cost minus accumulated depreciation. So the carrying amount, what is the carrying amount? This will be the net book value. I give an example. Carrying amount, this is the net book value. I gave an example of your phone, maybe on a smartphone. You bought it on January 1st. Now, when our year is ending on 30th June, we need to know what is the net book value of his phone. So, we take the cost. Maybe he purchased the phone at how much? 55,000. He purchased his phone at 55,000. 55,000. So at the start of the year, now you want to know when you are closing a year, how much, what is the book value? How much will you record in our books of account? So the cost is 55,000 minus the accumulated depreciation. His phone has depreciated by how much? 60%, or even by 30,000. Maybe if he decides to sell it now, how much will he sell it? Probably, maybe you can tell. He can sell it for 45,000. But phones depreciate very fast. Then how much can he sell it to you? 15,000. Yes. Maybe he can sell it to you at 15,000. So what's the net book value? Will be how much? 40? No, the accumulated depreciation is 15,000. So this is not this is the carrying amount. We are looking for the carrying amount. So the accumulated depreciation, we say this is how much? If it's to sell you at 15,000, it will be, the accumulated will be 40, isn't it? So it will be 55,000 minus 40,000, and that's how we get the net book value of 15,000. The way Dennis has said, he'll buy it at 15,000. So that is the net book value. So let's do this example. So cannot a business bought office furniture. A business bought office furniture for 300,000. A business bought office furniture for 300,000. Depreciation charged to date. Depreciation charged to date is 90,000. Is 90,000. So calculate the carrying amount. We have said the carrying amount is the same as net book value. Calculate the carrying amount. So do that individually. That one is a simple one. A very, very simple one. Very, very simple. We want to know the asset balance. What will be the asset balance? What will be the asset balance? So, how much is the asset balance? We have said the asset balance, or even the net book value, or the carrying amount. How much will it be? 210,000. How did we do that? So we have said the carrying amount. We have said the carrying amount. And this will be giving us the asset balance. It's always equals to cost minus accumulated depreciation. So what was the cost of our asset? 300,000. So it will be 300,000. Remember, in accounting you must always put these commas. They are very, very much important. Minus depreciation. What was the depreciation for that year? 90,000. 90,000. So our asset balance will be equals to 210,000. So that's our answer. So that's how basically you always get the asset balance or even the net book value that you record for that specific asset. Now, in our handout, there's question number 1. Question number 1. So can we check question number 1? In your books, can you try question number 1? So I've seen all of you have understood. You have gotten the answer as 60,000. That's very, very much good of you. So, what if now we have depreciation? We are told to calculate asset balance using the straight line method or depreciation. So how do we do that? For example, a machine was bought for 800,000. If it has a residual value of 80,000 and a useful life of 6 years. So then we are told the business has used the machine for 3 years. Calculate the depreciable amount. So we want to calculate the depreciable. We are told a business did what? A machine was bought at 800,000. Machine was bought. This was machine. Machine was bought at 800,000. Then you are told it has a residual value of 80,000. This is the residual value. Residual value of 80,000 and a useful life of 6 years. Useful life 6 years. Then the question says the business has used the machine for 3 years. The usage is how many years? 3 years. So calculate the depreciable amount. You want to find the depreciable amount. And you also want to find the annual. You also want to find the annual depreciation. So how do you calculate the depreciable amount? Depreciable amount, it means by how much has it depreciated? The depreciable amount. We want to understand this equipment or this machine. How much has it depreciated to? Okay. Or let us do it so that we can understand. So the depreciable amount will be equals to the cost minus the residual value. Okay, the depreciable amount. So what was the cost? The cost was 800,000 minus the residual value was how much? 80,000. So just like you have said, you want to know that this machine has depreciated by how much? It has depreciated up to what amount? Or by how much has this machine depreciated? So the answer will be 720,000. So that is the depreciable amount. Because the residual value, what we mean by the residual value is the amount the machine is worth at the end of an year. Then we want to calculate the annual depreciation. What is the annual depreciation? So we have said useful life is how many years? 6 years. Now the depreciable amount is 720,000. So our annual depreciation will be what? 720 divided by 6 years. So we get how much? 120,000. So every year it will depreciate by 120,000. What if now you are asked the accumulated depreciation? What will be the accumulated depreciation? We have said the business has used this one for how many years? For 3 years. So accumulated depreciation will be 120,000 times 3. So how much will it be? 360. So that will be the accumulated depreciation. Now, what is the carrying amount? What will be the carrying amount? The carrying amount will, remember we have said, it will be the cost minus the accumulated depreciation. So, the cost of our machine, how much was it worth? 800,000 minus the accumulated depreciation. Remember, we are working with accumulated depreciation. You have seen that in the question that we are doing for the last class in the morning. You saw there was accumulated depreciation. Now the asset balance or the carrying amount will be 800,000 minus the accumulated depreciation of how much? 360,000. So how much is this? 800,000 minus 360,000. 440,000. So that will be the carrying amount. Now, who has a question? Elizabeth, a question. So you can try question number 2. Let us try question number 2. Yes? The depreciable amount. This is where we got the depreciable amount. Or it is depreciated by 720,000 because the residual value was 80,000. When you are buying this machine, it was worth 800,000. But now it is for 80,000. So by how much has it depreciated? It will be 800,000 minus 80,000. So we get the depreciable amount. Okay. Yes. So this is the straight line. Never. Yeah, this is the straight line. Okay, we can try question number 2. We can try question number 2 as fast as we can. So, how much have you gotten as the depreciable amount? How much? 120,000. Okay. What about the annual depreciation? 30,000. And the carrying amount after 2 years? So you may be asked, this one is very, very much essential. You may be asked, maybe when preparing the profit and loss statement, in the financial statement. So one of the additional information is this one. We are given a computer was purchased for the equipment was purchased for this amount, the annual, the residual value is this. It was used for 2 years. Now it's up to you to know the book value of that asset. So briefly, very fast, who can do for us that question here? Because so that we are on the same page. Someone to do for us that question. Someone to do for us that question. Dennis or Michael, and do for us. And also explain to them.
A computer was purchased for 50,000 and there's residue value of 10,000 and the estimated usage value of 4 years. Business uses the straight line, division 10, and calculate the depreciable amount. First of all, before we enter the equation here, there is easy variance tumepewa kasura kwanza ni cost ambayo ni wa kile
The rest of your value.
ambayo ni Kenya shilingi 30,000. Ingine ni
Estimated useful life.
useful life. Ambayo ni 4 years.
Yes.
So with this variance, we can go to our first question, which is calculate the depreciable amount. So we know the depreciable amount is equals to the TP is equals to cost
cost minus residual value.
But the place of cost you want 50,000 minus 30,000. Buka
120,000.
120,000. Tunasahau kuweka currency.
Yes, that is very important. You must always write the currency. You don't know whether it is 120,000 goats or cows.
So the next question is about the annual depreciation. So the annual depreciation AD is equals to, now whatever you get as the depreciation value, the DB, the depreciation amount divided by the total number of useful years, which is 4 years. So the place of variance is equal to 120
120,000.
divided by 4 years. Unapata?
30,000.
Inakuwa ni Kenya shillings
30,000.
30,000. So that equation will
Carrying amount.
after 2 years. So tumepata the carrying amount, the carrying amount for now for the total years 10,000. That's why inakuambia the carrying amount for the 2 years. So unachukua the 30,000 and the number of years that will be given, which is carrying.
So first of all, the formula for carrying amount will be carrying amount equals cost minus accumulated depreciation. Minus accumulated depreciation. Yes. So now we want to find the accumulated depreciation for 2 years. That will be 30,000. 30,000 times 2. It will be 60,000. So the carrying amount, how much? You are not yet through. How much will be the carrying amount? Now our cost. What is the cost? 120,000 minus 60,000. They always remember to write the currency. First one you'll be examined about. So let us appreciate it with 2 claps. 1, 2. Okay, thank you so much. So that's how we do it. Correct it. So we have seen how simple it is. So for your assignment, you are going to do question number 3, 4, and 5. So try those questions. They will be good for your practice. You have seen you are encountering this start in the trading profit and loss, even in the financial statement position. So it's good that you practice those questions. I'll check them tomorrow. Thank you.